Listen carefully. Everything you've been told about where to park your money when the next crash hits is about to explode in your face. Forget the safe harbor of treasuries, that supposed rock-solid bet everyone clings to like lifeboats in a storm. The truth? They're not what you think. When panic floods the markets, treasuries become a battleground of fear and uncertainty. And guess what? The yield they offer might vanish while risk explodes elsewhere. If you're an investor, founder, or leader trying to protect your capital and your mission, relying on treasuries alone is not just naive, it's dangerous. Now, here's where most people shut down. They think safe equals government bonds, and green is just a fancy trend for feel-good investing. But that's a mistake you cannot afford to make. Green bonds aren't just some niche product. They're an evolving asset class that can actually outperform traditional government debt when everything else tanks, because they're backed by projects designed to generate real, tangible value, even in chaos. Here's your first hard truth. The next crash won't look like the last one. The economy, climate risk, and social pressure, these forces are hitting at once. If you want to survive and thrive, your portfolio needs to reflect that reality, not yesterday's playbook. So here's what you do. Step 1. Stop thinking of green bonds as just an ethical label and start treating them like what they are. Allocation to future-proof infrastructure and sustainable projects with backing that's increasingly embedded in global policy and regulatory frameworks. Green bonds issued by credible entities, sovereigns, multilateral banks, and top-tier corporations are becoming less volatile, less correlated with traditional markets, and most importantly, critical during downturns because their cash flows don't just depend on economic cycles. Climate policy, ESG regulations, and a global push for sustainability are now baked in. That makes them a hedge that many overlook, but you can't afford to ignore. Step 2. Don't settle for index funds or basic green bond ETFs unless you want to watch mediocre returns while the real gains happen somewhere else. Get tactical. Look for green bonds linked to projects with built-in revenue resilience, renewable energy farms with long-term contracts, sustainable transport with government subsidies, and corporate bonds issued by companies actively transforming their operations to meet hard climate targets. These bonds can cash out steady yield when panic hits traditional credit markets. You want those assets now. Step 3, and this is critical, diversify your impact investments not just across sectors, but geographies where climate urgency has triggered real policy action and where debt markets have depth. Emerging markets, despite the noise, offer massive green bond issuance fueled by climate finance dollars. They're volatile, yes, but the upside comes when you get the right tranche, at the right time, with real due diligence. Don't be scared of complexity. It's where most investors lose out because they stay stuck in their safe bubbles. Finally, here's the kicker. Green bonds aren't just about money or mitigating risk. They represent a chance to finance a real change, a chance to align your capital with a system that not only survives the next crash, but wins by reshaping the rules. If you just pile into treasuries, you're betting on the old broken world. But green bonds? They're a way to build something new, something sturdy when everything else is shaking apart. This isn't a lecture, it's a call to act with brutal clarity. Stop pretending treasuries will be your safe bet. Stop underestimating the power of green bonds to protect and grow your capital and your legacy. Get serious, get tactical, and start building that future-proof portfolio now. Otherwise, when the crash comes, and it will, you'll be left scrambling while others are already positioned to own the new world. That's the harsh truth. What's your move gonna be? Subscribe to our YouTube channel and open the featured link to learn more.